morning, and welcome to episode 288 of Getting Rich. I'm your host, Rich Checken, president of Asset Strategies International, and today is Wednesday, August 5th, 2026. Now, I don't do this often, but I am going to yet again, second week in a row, I'm going to dispense with pricing. I promise you I'll have prices next week. But the reason I'm doing that is because, let's face it, gold has been range bound. We did have some news come out last week. Gross domestic product growth slowed. The rate of inflation slightly eased. Now, that doesn't mean the prices are falling. They're still going up, just not as fast. So the rate of inflation eased slightly. The Federal Open Market Committee, Chairman Warsh and the gang, left interest rates alone at 3.5 to 3.75%. No change there. And the war in Iran opened up some new fronts. So those are the big developments over the past week. And in the end, we've got gold continuing to be range bound. And that drives people to come up with two thoughts. Either, and I'm in this camp, it's a fantastic opportunity, a dip in a bull market, a prolonged dip in a bull market that you can take advantage of to buy well. Or there are some folks out there, and they're growing in numbers, that think, hey, this is it. We've seen gold's peak. The bull market's over. Time to get out, bail out, get to the exits. My question for you this week, are you in that camp? Do you believe this is the end of the gold bull market? And if so, why? I would love to hear some of your rationale. Today, I'm going to give you my rationale as to why I don't believe this is the end of the bull market. This is just a dip in a bull market and an opportunity to buy well. I look at about 9 different indicators to tell me that this would be the end of the bull market as opposed to a dip. The first one I look at is the duration. Now, gold bull markets tend to last a decade or longer. Okay. And if you look at the charts and you saw where we broke out, whether you picked 1500 or 1800 as your number of the breakout, that occurred in 2020. This is 2026. By the most minimal expectations, we would expect this to last another 4 years. And I think that is the bare minimum. This one may even last longer. Second thing I looked at is the gold price. There, I would like to see a minimum of 2 to 3 times the previous bull market gold price. Now, we hit that darn near. We got to about $5,500, $5,600. The last bull market peak was $1,900 an ounce, and we got to 56. We should have gotten to 57, would be 3 times. I think this market is different because we juiced the money supply so much, both after the financial crisis 2008 and then again with COVID in 2019, 2020. And as a result, I expect to go more than 2 to 3 times the previous bull market high. I think that's maybe one indicator that hit, but I don't think it really hit. The gold silver ratio, how many ounces of silver it takes to buy an ounce of gold. As gold and silver move up, both of them, silver tends to outpace gold. So as they're both moving up, the ratio, the number of ounces of silver it'll take to buy an ounce of gold will come down as silver outpaces gold. We should get to a number somewhere around minimum 35 to 50 to 1. We touched near 50 and then jumped back up, and we're well above that now in this dip in the bull market. We have quite a bit to go with the GSR. Sentiment. Has anybody taken an Uber ride lately and had their Uber driver tell them, gushing about all the profits they'd made in gold and silver? I don't think so. It's not on anybody's mind. Right now, gold is cheap and hated. That is not the sign of a peak. It's the sign of a interim or long-term bottom. Interest rates, okay? Interest rates need to go high single digit, low double digit levels, not 3.5 to 3.75. They need to get 9, 10, 11% before you have a real return when you take out inflation that makes you not want to hold gold. Okay, and we're just not seeing that. We're seeing 3.5 to 3.75%. There's a chance we may go higher, but with $40 trillion in debt, we can't go much higher. Interest rates are not a factor. The U.S. dollar, we need to see strength in the U.S. dollar as an alternative to gold. People have to have confidence in the U.S. dollar so they're not running to gold for safety. During war, we're seeing a bit of that run to the dollar for safety. But let's face it, the dollar is only trading on the legacy index at 100 to 101. It was 116 not very long ago. The dollar is in demise. It is not in the ascent. The dollar is not an indicator. Social stability. Just look around, especially in your cities, but all over the country, all over the world. Okay, we are seeing absolute instability on social issues. That is not the time frame or the environment where gold tends to fall. Geopolitical stability. Peace is not breaking out worldwide. We're finding the war open up on new fronts and other wars elsewhere. The bottom line is the world is not stable. Gold is needed and necessary. The last indicator I look at is the Dow versus gold ratio. How many ounces of gold would it take to buy the Dow? When this market is at its peak, I would expect 5 ounces of gold will buy the entire Dow. Right now, it takes just under 13 to get to 5. Either gold's got to get to $9,000, $10,000 an ounce, or the Dow's got to drop to about 25,000 from 52. Okay, so we've got a long way to go. My gut feeling is the answer is somewhere in between there for gold and the Dow, but we got to get to 5. We're nowhere near it. You put all these factors together, and you've got the end of the bull market. One indicator sort of maybe firing does not dictate this is the end of the bull market. I need to see 2, 3, 4, 5 of these indicators firing to suggest that now it's time to think about the end is coming. We are far from it, in my opinion. Again, I would love to hear your thoughts. Do you think this is the end of the bull market? If so, why? I'd love to discuss that. I'll raise your points on the air. As always, we want you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions. Tell me what you think about the end of gold or not. Go ahead and follow us on social media. Take our twice weekly, always something interesting alerts, and our once monthly information line newsletter. Great edition coming out tomorrow. But in the end, don't ever forget, getting rich starts with keeping what's yours.